What is going on, everybody? Welcome back to Rather Than Trading. Round of applause. Guys, I'm going to show you exactly what the catalyst is for markets to move. This is the knowledge they won't teach you. The government won't teach you. Schools won't teach you. I'm going to expose 5 things right here. 5 important things why the markets move and why really are people not profitable. First things first, everybody. I'm going to tell you this right now. Screw indicators. Number 1, screw indicators. Guys, the government and the higher ups want you to use crap indicators so that you can place stupidity trades in the markets. You know, a lot of people use RSI a lot, trend line indicators. All those indicators are bullcrap, and they're never going to teach you anything because the market drives on inefficiencies, guys. They're manipulated. And, you know, I might get a lot of criticism for this, but the higher ups don't want you to know this. Indicators don't work. Literally, if I go on there and look up an RSI, okay, Relative Strength Index. A lot of people use this all the time. Okay, this is going to show if the market's overbought or sold. It's never going to dictate the market's overbought or sold because the higher ups manipulate the market. So the reason why indicators don't work, for example, like the RSI, is because the thing lags. It's like crazy. Price, so say like right here at this low, or this low, for example, price created this and it crossed within this candle. Okay, when it crosses like this, it's so delayed. Like price is already going down and it crosses. You know what I mean? It's so delayed. It doesn't give you no good entries. It's supposed to tell you if the market's oversold and overbought, but really the government wants you to think that. But because it's manipulated by them, you got to look for manipulation in the markets and you got to go off different things. I'm going to get more into that later on other secrets. So RSI doesn't work because they rely on past data. As you can see, look at, you see all this. Oh, this looks so promising. I'm going to take a trade because right here it crossed, but this time it's about to cross, but it's lagged like crazy. This thing doesn't work. It's lagged like crazy. And I'm telling you, markets drive off of manipulation. Screw indicators, okay? So number 2, guys, price moves are manipulated. So like I said with the screw indicators, okay, they don't work. Manipulation happens in the market. This is exactly why I go to forexfactory.com and I look at things like this. If I see a moderate impact or a lot of high impact, as you can see, all these red ones mean high impact in the markets. This is going to be extremely manipulated in the markets, guys, okay? And I'm telling you, it's all through market manipulation, okay? Banks and the government are controlling the market to manipulate you, to make you lose. So once you know that, you're going to become more profitable because markets are manipulated. So, all right, on a low impact day, they're actually kind of algorithmic, okay? So usually all the time when there's low or medium impact news, like for the whole day, it's usually algorithmic, okay? There's going to be times in the market it drives up like this, like crazy, and then eventually it's going to go to things in the markets up and down that signifies the markets that the markets think is a good place to settle at and to reject from and to use as support from, okay? So with that being said, markets are manipulated, and usually manipulation in the markets, traders like you get trapped. So when it comes to manipulation in the markets, guys, let's go ahead and give you an example. Usually manipulation in the markets, you know, are there for the higher ups and the banks and the government to really take advantage of you through stop runs. So basically, when we're in a consolidation zone, as you can see, so it comes up, down, up, kind of like it's consolidation here, okay? As you can see, a lot of people, the people that are in short right here, okay, it's going to stop them out first. Boom. Stops them out. Boom. Look at this. Right there. And then what most people think is they see this trend line here. They see it, trend line, which then comes up here and then breaks that trend line, which people actually go for a buy just because it broke the trend line. The higher ups and the government want to take advantage of this type of person, okay? Trading this kind of trend line here. They already took advantage of the shorts, okay? But they want to take advantage of the people here going shorts again, right? So, as you can see, price is going to go ahead and move, okay, in their favor so far. But then look at this. Immediately, spikes up. Price spikes up from the area, stops you out. Then what happens? Let's see here. You can see price goes without you, see? So, those are called stop runs, okay? Price moves are manipulated through stop runs, through consolidation, which is a stop run. Then the people going short again, they get stopped out. Then the market goes. So that's exactly what it is. So basically, if you were smart, if you're a banker, right, you would actually go short after they get stopped out, which would probably be this high here. Okay. And then you would have your stop here. Then you target all this. Look at this. Number 3, retail traders always lose because they go off trends. Okay. Retail traders go off trends. I'm going to go ahead and draw a trend line out, maybe from this high. Most people trade trend lines and they're bull crap because watch this. I see a break of this line. Cool. I'm going to go ahead and go short instantly right here. I'm going to have my stops at this low. Okay. First of all, look at all this drawdown. That's insane. Second of all, where are you going to take your profit at? Okay, at this high, most traders go for a large trade off of break of a trend line. So what happens? The banks and big corporations want you to trade trend lines so you could lose money, so it could actually stop you out just like they did here. And when it comes to going off trends, you don't know liquidity. So what that means, you know what that means? You are the liquidity, okay? Bankers and large corporations only go off liquidity. All right, guys, so number 4, chart patterns do not work. They don't work. Again, bankers, large corporations know everything, okay? They know this. It doesn't work. They know. Okay, so for example, see right here, I see a head and shoulders pattern. This is a little choppy, but this is exactly what happens all the time. So look, you got a shoulder here, okay? And then you got a head, okay? You got a head, and you got another shoulder. Head and shoulders pattern, okay? We're going to see a break of this neckline. So once there's a break of the neckline, right when it closes there, okay, perfect, guys. Perfect. Okay, this is my chance. I'm gonna go short right there with highs 1, 2, 3 or so. Let's do that. Okay, cool. Again, large banks, corporations know this. Let's see what happens. Oh no, the trade's not working. Oh no. Oh, I lost so much money. Okay, this is exactly what they take advantage of you. Okay, just because you see a chart pattern does not mean it goes short right there. Look at. So when it comes to manipulation like this, guys, the government uses manipulation all the time through stop runs and head and shoulder patterns, indicators, consolidation areas. Always, okay? They always do stuff like that and manipulate you to lose your money and to keep you from being profitable. Once you know this stuff, guys, you could actually enter better on trades and actually wait for manipulation. Then you go short or go long based off your trade criteria rather than just going, off of a head and shoulders pattern. With that being said, guys, number 5, I hit the mic. Number 5, oh my gosh, it's gonna be crazy, okay? Markets are controlled, okay? Not only manipulation, but they are algorithmic. And what I mean by algorithmic, okay? When there's a day when there's no high impact news, so for example, like today, markets are more driven to liquidity points. So again, relatively equal highs and lows in the markets, and also through inefficiencies. So what are inefficiencies, guys? This is what price is drawn to algorithmically. Okay, it could be a fair value gap, it could be order blocks, it could be breaker blocks, it could be different things in the markets that actually pursue movement, okay, through algorithm. All right, guys, so with that being said, this is going to conclude this video. Okay, again, take these to heart because this is legit stuff right here. Okay, this is crazy. These are the things that the government doesn't want you to know again, okay? Hit this like button, hit the subscribe button, guys. Now, hopefully the government doesn't come after me for making this video. But anyway, guys, show some support, hit that like button, subscribe. Peace out. Trade on, everybody. I'm here with you all the way. Peace out.